Is it time to sell your USD? As a disclaimer, none of what we say should be taken as financial advice. This is purely educational.
Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it.
Okay, MJ. So, why is the ringgit strengthening again?
Yes, for some context, I think from the low in November 2022, sorry, the ringgit has essentially appreciated by roughly 10%, give or take. That is obviously huge, but we don't hear that in the news, right? We only hear more when it's dropping, but when it's quote unquote good news, so we are trying to promote a little bit of good news, I guess, for Malaysian investors. Now, the reason why it's happening is relatively simple. It's largely due to the US dollar declining. So there's it's an index that people use to measure just the US dollar itself. Instead of comparing it to all different types of currencies, is the DXY. So the DXY on a high,
it crashed
in September, was roughly 114. So now it's 102. That's roughly a 10% decline now, right? So it's nothing special. In fact, the ringgit in a way has stayed put. Not much has changed. It's just that the US dollar strengthened a lot. So then the question is, why is the US dollar strengthening? Well, inflation expectations are lower.
Right.
And so guys, the idea is that if inflation goes up, interest rates need to go up as well. If inflation start to wane, not saying interest rates will start to wane, but it will certainly slow down in terms of going up or stay stagnant. And interest rate is just really trying to tell the world like how valuable, quote unquote, your currency is. Right. Interest rates is what we call the price of money. So everything has a price. For money, that price is called interest rate, right? Because money is not free. So if the interest rate goes up, your money becomes more, quote unquote, valuable. So people will hold on to more US dollars. But now that it's dropping, people are going back to other currencies.
Okay, so but is there any sign that the Malaysia's economy is like recovering?
Yeah, certainly it has contributed to Malaysia's strength. If you recall, country like Japan depreciated a lot more than us, mainly because of COVID issues,
Right.
And as well as the economy is just not as good, right? So you can see, by the way, OpenDSM is an amazing thing.
I saw the upgrade, right?
Rafizi Ramli came up with. Excellent job. You can see, right, all the sectors, right, in the GDP, right, from services, manufacturing, agriculture, mining, construction, import duties, all are up, right? Like minimum is like 9%. Or sorry, of course, except agriculture, everything is nearly double digit, right? So, we are a country very reliant on manufacturing. And also on services as well, right? So it definitely, our economy is looking good looked good based on past data. In the future, who knows? But a lot of it is also the stability we are getting from a new government. The government is not like super stable, right? It's not like the BN days during Najib's era, before Najib.
But he's doing a lot of things that most Malaysian wants the government to do right now.
Yes,
is it something like that?
No, it's stable.
Okay.
So, there's no Sheraton move, there's no prime minister in 2 years kind of thing. So for a country like, so the way a lot of these institutional fund managers look at Malaysia or any capital allocator for that matter is, they whether it's a fair bias or not is a separate question. But when we are not quote unquote first world,
Yeah.
and we don't have the kind of press freedom or freedom of speech level that, let's say like the US expects, right? Then they will always lump in, political risks,
Yep.
right? So it doesn't help that we are dependent on, in the views of many, we are dependent on oil. And as a result, political stability is very important. But it's not very important for a country like, let's say, the US. The US has always been a mess, right?
Yeah.
Government shutdowns are very normal, things like that. Trump can get elected. No one cares, right? People still invest. So, yes, political stability has contributed a lot.
Okay. All right. So now here comes the even juicier question, right? So will Ringgit be back to their glory days where they are 3 Ringgit against the USD?
I think it's unlikely, especially for a developed, I've heard it said somewhere that we are like we're not a third world country. We are like somewhere in between. We are not actually even a middle income country. We are a upper middle income country. To give some sense, to be in a upper income nation, right? You need to have 15,000 GDP per capita. We are at like 12 point something or 13. Like that.
I think you did discuss this matter with Guan Yi, right? In our podcast.
Which haven't come out yet, but it will come out soon.
But if it does come out, we'll just put the link somewhere.
Correct. So we are an upper middle income nation, right? And so for nations to go into the upper income level, right, your currency makes sense to depreciate over time. And the reason is because for you to catch up in terms of wealth and all that, you have to rely a lot on manufacturing. And almost by definition, if you are a small country like Malaysia, you must export. And because it's a lot bigger, the market out there, one. Two, manufacturing is a very exportable industry, unlike services, right? The example I always give is hospitals. Hospitals, let's say, versus gloves, right? You can have an international glove company where you export gloves, but you can't, like KPJ can't export its hospitals, right?
Correct.
Services. So that's why our ringgit will unlikely go back to those quote unquote glory days unless we become very, very service oriented. Then we will see potentially it going back. Now, the reason why it's not necessarily a good thing as well for us to go back to that kind of money is because the example I like to give is this thing called the Plaza Accords. So back in 1985, Japan was at the peak when it comes to its wealth and when it comes to its manufacturing and export capabilities. So, cars like Toyota and all the Japanese cars, they were essentially dominating alongside the German cars, the American market, right? And America allows them to dominate. So, I mean, it's a very, very long story, but basically what happened is that everyone agreed that Japan will retain its currency. It will not try to let it fall further, and it will let the US dollar actually fall further compared to the Japanese currency. So overnight, Japanese exports, not that they became uncompetitive totally, but they were not as competitive anymore.
Right.
And so when it is not as competitive anymore, a lot of these manufacturing companies with huge export potential suddenly go down. And when the potential starts to get limited, then what you will see is that the kind of people that are like the kind of hiring you can do, the kind of money you can reinvest into the economy suddenly becomes less attractive because you can only serve your own market. And to be fair, Japan, 100 over million people, is pretty big size market. But for their kind of capabilities, they can go global. And so they are stuck there. And that's why you see the economy that Japan has experienced over the past 30 years. Essentially, it has moved nowhere.
Yeah. It has been like stagnant.
It has not moved anywhere. And then that will lead into a lot of like social problems and all that, which is a separate discussion. So it's not necessarily a good thing also. And I don't think it's very likely unless suddenly, Penang and all the big cities in Malaysia outside of KL all become like KL, then maybe we'll see something very different.
All right. Okay. That's pretty interesting.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
Okay, so the next one is we're going to talk about our neighboring countries.
Yes.
So Vietnam has been catching up with Malaysia lately.
Yep.
And they have been doing pretty well.
Yeah,
if you look at their currencies, right? Vietnam's currency and also Thailand's has been stronger than Malaysia. So is Malaysia falling behind?
I think everybody has a perception that Malaysia is falling behind because of this. You have to understand that Thailand and Vietnam are coming from a lower base. They are bigger populations and their labor cost is cheaper.
Yep.
And for sure, this attracts a lot of people globally, right? We used to have the advantage. Now it's much less. But our advantage is things like, I think, higher level of technical expertise and also, I think, the language. Because we have an English-speaking population.
Right?
Correct. It's not like Singapore level, but we don't need Singapore level to run a factory, right? You need it for services, yes, but not manufacturing. I wouldn't say we are falling behind because I think sometimes we tend to look at all this in like one-dimensional terms. So we look at how, for example, right, Vietnam's FDI has grown like that, whereas Malaysia is like that, right? Let's put a 10-year, right? So you see, Malaysia has been up and down, but Vietnam is like that.
If you go to the 10.
Correct. So
okay.
Again, once you realize that they are starting from a different base, one. Two, their population and their economy, especially Thailand, is a lot bigger than Malaysia. So Thailand's economy is, I don't have it here, but Thailand's economy is 500 billion. And Malaysia is around 370 billion.
Yeah, 500.
Right?
Yep.
So when you look at Malaysia's GDP, you are looking at 370 billion. But when you look at the FDI for Thailand, let's say, right, they are at 12.16 billion US dollars. But Malaysia is close to, okay, you can't really see it here, but it's close to 20 billion.
Oh, yeah. Sorry, 20. Yeah,
right. 20 billion US dollars. So as a percentage of the economy, we are doing actually a lot better. Now, Vietnam matches us or maybe even a bit higher. And the reason is because I think, like I said, labor costs, they have a bigger population. And of course, they can speak Chinese because, they're neighbors with China.
Yep.
And of course, they are very hardworking and very talented group of people. So another country doing as well as we are or better at us doesn't mean that we are suffering. I think these Malaysians got to understand this.
Yeah.
It doesn't mean that you are backwards. If you look at everything in a relative sense, it's like how you can become a millionaire or a multi-millionaire, but then you suddenly get Bill Gates as your neighbor, then you feel small. That's an extreme example, of course, but that's essentially what's happening.
Right.
And when you look at some of the stats, right? I mean, we have been pretty consistent, right? So we have been growing, right? Last time is 9 billion. We are always, it ebbs and flow, right? It doesn't always grow. Even for Indonesia as well, it's not that much. You see, Indonesia is like twice our FDI. This is 2021 figures. But their economy is like 3 times our economy. And they are only 2 times our FDI. Now, of course, the standout one is Singapore. But Singapore is a little bit different because they are also a hotspot for people to park their money there. So it's very different. Not necessarily if someone park their money there, they will create jobs for Singaporean. They might create jobs for Singaporean residents, but it doesn't mean that Singapore, people. So Okay, long story short, I don't think it's a worry. But that said, I worry if the FDIs are declining and they're not doing well. But the thing is that they're not. They are still growing. They're just not growing as fast as me. That's it.
Right. Okay. So actually, just one final question.
Yep.
So as investors, right? Because personally, I would actually also tend to look at Vietnam also as a place to invest also.
For sure.
So yeah, as investors, should investors diversify in terms of country?
They can diversify, but from what I understand, it's actually quite difficult. I speak to some of my Vietnamese friends. They say it's quite difficult to, if you're not Vietnamese, to open an account and start investing in Vietnam. But I'm sure there's a way lah. For sure there's a way. But
right.
The alternative is to actually, talk about companies or invest in companies in Malaysia that have Vietnamese exposure lah, right?
Yep.
Right. So I mean, some of the companies, right, that we cover in our FIRL Pro program, which by the way, guys, you can check out in our comments and description.
Yeah.
Some of these companies have exposure to Vietnam.
Yep.
In fact, they're doing well because of Vietnam. Right?
Yep. That is true. Okay, so if you want the free sample of FIRL Pro, the free sample is in the links and description down below. Other than that, I think that's pretty much wrap up today's video on the Ringgit. Yeah, so Ringgit is back already. Yeah. Sell your USD, not just kidding. All right. Okay, so thank you MJ again for today's video. I hope you guys enjoy today's content, and don't forget to follow us on our social media, Facebook, Instagram, Telegram, all those good stuff. The links are in the description below, and we'll see you in the next video. Bye.